Hey there YouTube, and welcome to Big Mike Beard Wisdom. So in today's video, we're going to touch a little bit on the stock market, mostly to get you guys motivated to look into it a little bit more, motivated to maybe play around with it and learn a little bit more about it, and try and help yourself out later on in life, perhaps. So for me, years ago, the stock market was pretty intimidating, and I think it's just due to a lack of knowledge and a lack of experience that I had with it. So you wouldn't try and diagnose something yourself if it was important and it's something you really should see a doctor about. You also probably wouldn't try replacing your old HVAC unit with a brand new one without having some sort of knowledge or experience with it. And I also doubt that you try and swap your own engine unless you had a good resource, some good information, or previous experience doing this kind of stuff. But if anyone does kind of recognize these kind of things, or you're like, hey, I've done that. I've swapped my own engine. I've replaced my own AC. I'm a doctor or a nurse. I can look into this stuff. Your confidence in the job that you did probably comes from your knowledge and your experience. So it's one of those things where as you get into it, the more you do, the more you'll learn about it. So the three different ways of investing that I pretty much use is a growth mentality. I focus a lot on dividends, and I do some day trading. So the growth is pretty interesting. Growth is basically you're focusing purely on purchasing stocks that you think are going to wind up growing in value over the next, several years and stuff like that, and holding on to them until they hit wherever you think, wherever you're confident that, maybe they've peaked out or something, and then selling those and taking your profit. Dividend investing is you're looking at companies that are going to stay for the long haul, and they're going to pay you for owning the stock. So it's kind of weird, but we'll get into that in just a moment. And then day trading. So day trading, I kind of also lump that into people that buy a stock and then maybe sell the stock a couple days later. So, and then whether or not you're buying the stock within the same day and selling the stock in the same day, I kind of put rapid movement of stocks under like the day trading blanket. And day trading is one of the more dangerous methods of investing, just because if a stock is volatile, so it's moving up and down a lot, and you're targeting that stock to try and make some quick cash, it's not always the stock that you may want to keep in the long run, but it's something that you have to evaluate. Should something happen that as soon as you buy it, the value drops pretty quick, are you going to take the loss, or are you comfortable holding it for the long run and maybe looking at that prior to making the purchase? So this is a quick snapshot of one of my accounts that I have with E-Trade, and basically you can see that the green means that it's gone up, red means it's gone down. But like growth-wise, it'd be things kind of like this Foot Locker stock right here. So I bought Foot Locker at about $26, and it's currently valued at $51. So I've had about a 98% increase. So for me, that follows pretty good under the growth idea. But I also bought Foot Locker because they're a dividend paying stock, which we'll get in on the next slide. So here we are on this slide, and it basically all it is just the exact same thing. I just have a filter set up. That way it pulls in dividend stuff. So the way dividends work is, so here's Foot Locker again. So bought at 26, current value 51.60, went up 98%. And then this right here is the ex-dividend date. So if you owned this stock prior to this date, so if you owned it on April 14th, 2021, then this would pay you a dividend on April 30th, 2021 of 20 cents per share. So with me owning 3 of these, then on April 30th, I would get 60 cents for owning the Foot Locker stock without doing anything. Now let's touch real quick on day trading. So day trading wise, you can see here that on February 2nd, I bought AMC stock for $826.75. And I actually put the order in by accident and semi-freaked out. But the nice thing with how you trade stocks is sometimes you can put in like a special kind of sale, which is what happened on the next day. So I think I bought it at one of the higher rates for that day. But the next day, luckily, the stock went up. So on the 3rd, I set a limit sale, which is basically saying that I would like to make this much money on it, of $8.41, which would have gotten me about 15 cents in profit. And then when the sale actually went through, the stock was actually valued at $843.13. So instead of just making like about 15 cents, I made about 17 cents. So that's not a really great example of day trading, but these next ones kind of are. So the AMC stock shortly thereafter kind of went down into a valley. And some people will tell you to buy the dip. So it's just a mentality for buying stuff. So maybe you're purchasing as the price is dropping. And what happened here was that I bought it at 605, 590, 575, 550, and then 545, to then turn around 2 weeks later and sell all those shares at $10.25. So that made way more profit than this 15-cent one did. But it's one of those things where just as easily as it went up, it could have came down. But the nice thing with AMC is its volatility. When we're talking about volatility, it's how much the stock is moving. So you can see how much is jittering in the course of days. And that jittering causes a fair amount of highs and lows. So you could put in a buy at a certain price, pick up the stock, and then hope that in the course of jittering that it goes up to a certain point and meets your sell price. So that's kind of how day trading works. It's one of those things where you buy it hoping it's going to flash up and then selling it as soon as you can. That way you've got it and now it's gone. So it's kind of one of those things. I'm not the biggest fan of it just because there's things that could happen. So like if you would have bought at the tail end of the 25th, it looks like it was up near about $10. You would probably still be holding on to that, trying to sell it for profit. Whereas anyone that would have bought probably, toward the tail end of the 24th, if you would have bought this at $7, you would have made plenty of money, trying to flip it real quick. But that's where it gets into a mentality of when do you set the sell, when do you set the buy, when do you buy a stock, when do you sell a stock. And that's kind of one of those things where it's very complicated, and I recommend watching a bunch of different YouTube videos. There's a lot of different guys that talk about it, and then there's a lot of guys that I agree with, a lot of guys that I don't quite agree with. But it's one of those things where the more that you watch it, maybe YouTube videos, the more you read about it, the more you'll learn about things. I especially like the YouTube videos where the guys are trying to teach you how to invest. So they're trying to teach you how to look at something, how to read their fundamentals, how to read an earnings release or something like that. That'll give you an idea of whether or not this is going to be a good stock to hold or a good stock to get rid of. So, and then for AMC, it's one of those stocks that right now it's kind of a big player in a bunch of different kind of games. So like the Reddit community is talking about AMC, but AMC is the big movie theaters. And at one point in time, so the lowest it was ever valued within the last 52 weeks was $1.91 on January 5th. And the highest it was valued was $20.36 22 days later. So, and they've released some statements. There's been news about it. So like AMC is going to be opening theaters soon in different areas. So it's kind of one of those things where this could be a stock that could be really good to hold on to. But if there's any kind of COVID stuff that happens that extends it, it might be one where it's not going to work out. So I think of stocks in a lot of ways as almost like legal gambling. But you need to have a different mindset for how you invest. So someone looking to do growth investing and you're going to maybe purely focus on growth, then you're probably ignoring the dividends and you're looking into stocks that you can hold for a while and make money on. a dividend investing, which is what primarily I do, is I try and find stocks that pay dividends, mostly because I'm trying to get passive income kind of built up. So, but there's tricks to dividends too, because the company's got to be plenty profitable. Otherwise, they may cut or get rid of the dividend completely. And day trading, you're kind of rolling the dice as to whether or not there's going to be news coming out about something that might, make the stock rise rapidly or might make the stock drop rapidly. So I haven't been investing in the stock market that long. I started back in April of 2019, and basically I put $1,000 into E-Trade. That way I could start an account. And then I've put $100 every month in after that. So the account's currently at about $7,832 with a total unrealized gain of almost $900. And then you can see they give you more information, like a day's unrealized gain, a day's realized gain. So anytime it says unrealized, so if someone's like, oh yeah, I bought this stock and I bought it for $1 and then it took off and now it's $900. Well, that's awesome, but the big thing is, can you sell it at $900? So it going from $1 to $900 gives you an unrealized gain of $899. But if you can't sell it there, then you haven't actually made that gain yet. So, and then this was a day that I was doing some day trading, so that's why they have days gain realized. So I must have made some type of trade that made me $53.14. And one of the big things I was doing was that I was basically trying to build up free cash. That way I can try and shift money around. So some of the not so great performers, I dump those off in order to try and reinvest into the better performers. And then by building up a little bit of cash, you can purchase more. So for me, only putting in $100 a month, it really limits the amount of stocks I can buy. But it also gives me plenty of time to look at some stocks and to try and learn more about them. So like if I wanted to buy anything that was $200 or $300, like an Apple stock, then I would have to actually save up for 1 or 2 months in order to have enough money to do it. Otherwise, I have to move money, so I'd have to sell some stock in order to try and build some cash in order to make a purchase. So for this particular account, this is like a forecast of the dividends. And basically you can see that for each month there's a certain amount of money coming in. And then most dividends pay out quarterly. That's why like March, June, September, and December are all the same height. Same thing with April, May, June, July, August. So for all the other ones. So they skip in between. There are some stocks that pay monthly, which will wind up raising all these bar graphs up. But the part that really has me interested is I have a goal right now of hitting $365 a year of dividend income, hopefully by about April. So that way, 2 years in, I'm at $1 a day. And the cool thing is that because I'm only investing about $100 a month, once I hit $1 a day, that'll be about 3.5 extra months coming in. So it should help me build the stock portfolio even faster by reinvesting that money. Well, that's about it for this video. Hope you guys enjoyed it. Hope it maybe, piques your interest a little bit about the stock market. I know there's a lot of great YouTube videos, and honestly, there's people that just know way more than I do about stuff. And I do really enjoy the ones where they try and teach you how to invest. They talk a little bit more about, some of the terminology or the things to be looking for. And it's one of those things where I really like that they do that, because it helps anybody. So if you guys liked the video, I'd appreciate it if you like and subscribe. Otherwise, I'll check you guys next time. Windows Shift Q? Something? Oh, return to this joke, huh? Windows Shift. And when we're talking about hey there, YouTube. Welcome to Big Mike Beard Wisdom. Oh, I'll take a drink. wrong tube. I'm drowning. Oh, that's not how you want to start a video. Oh.